Good morning, everybody. Welcome to the morning stock market and volatility report. As I am Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, OptionPit.com. Our Trader Summit, June 4th to 7th. You have a chance to trade, have fun, have a good time. Let us know. There's a couple spots left. I think the first 2 days are now full. There might be one spot left. You can grab the second 2 days. But it's fun learning how to trade, all kinds of stuff like that as well. Also, we'll be debuting our edge hunter sheets, basically using volatility to find edge in the marketplace. That's what it's for. So it's helping you set trades up that can work out. For the vol products, if you like buying or selling vol, think of it kind of like as buying strangles or selling iron condors. Looking at all kinds of butterflies and how to place and price time spreads. So take a look here at the Edge Hunter. Also, we have our newsletters, our gold, platinum, and pro levels, all that kind of stuff. So if you want to learn how to trade volatility, this is probably a pretty, I think it's the best place to learn how to do it. And with that, let's get to something. So here's just, I think, a simple chart. I'm not a technician, so to speak, but I see stuff like this and I go, it makes me think. Okay, so here is the SPX. So I can do this right. Here's the SPX, and here we're at an all-time high when the trade deal is going to be done. And then here, China walked away from the table and got angry or whatever. And is this 2,900 right here? Let's beep. Hold on here. Do you see the little spotlight thing going across? Have we been able to see above 2,900 since this happened? So it feels like that's a pretty good line in the sand in the short term. They're still talking, so I don't know. Do you sell the 2,900? Broken wing flies above 2,900. I think anything above 2,900. Any iron condor, sell the 3,000 strike. We're going to just go back and forth. I thought about that last week. Not much has changed on that score. We can't get above that level until the deal's actually done, I think. And who the heck knows when that's going to be. So it will take a long time before we break above that. So anyway, that's my opinion on that one. But I just see like, okay, 2,900 looks like that's the spot. We can't get past it. All right, not super complicated. VIX land, 15 volatility. The only thing I could say with the 15 vol is it's fair to the last 10 days. The 10-day vol is 17. So until some of this, back and forth sort of comes out of the market, I think we're going to see more of it, but I think the oscillations are going to start to decrease because we've accepted the fact they're still talking. What they're talking about, we don't know. So if anything, VIX kind of slowly melts away until we have some new news. So I just think this, you're going to see this will be kind of less, and VIX just kind of creeps down. Do we have an outside shot at VIX marking down to 14.5 or lower tomorrow? Possibly. But that's about, I think that's about it. So from a vol trading point of view, if you're trading volatility, if you're trading the vol products, it's hard to get like a direct line. VXX is down $1, but it was almost up $1 yesterday. So it's harder. So, time spreads in VXX could work. It's weird, but I think it's almost ideal for a time spread, even though VIX is at 15, because I think it's going to be harder for that 30-day SPX vol to really go away because it's sort of in the sweet spot of where the talks go. So I think if anything, you're kind of planning on things settling. I think near the money butterflies could work very, very well in SPX. Just trying to take the premium, and have a junk put or something just in case things totally blow up. But I think that's the kind of market we have. The only other thing I would mention is it seems that the whole semiconductor route seems a little overblown. You know, MU back to levels in January, NVIDIA January levels, Apple surprisingly back to January levels, prices you could have got in January. Intel, I think this is like a 2 or 3 year low. So it's there. I think there's some opportunity in some of the better tech names. Like they put it right back to January again, like this year hasn't even existed. So I think those are worth taking a look, especially if the trade thing, again, it looks like it might happen, but that's the risk. But I think you could find interesting opportunities there as well. So, I mean, stocks that are back to January levels, I think are worth taking a look at. I think lastly, just on a slightly weird note, AT&T doesn't look like anything that relative, right? All of a sudden, Game of Thrones, blah, blah, blah. I mean, what's going on here? The possibility of mergers, that could be it. The fact that AT&T owns all this content now, everybody might be waking up to the fact that that could be worth some money possibly. You know, you got 18, 19 million people watching Game of Thrones. There's something there. I just don't think AT&T has figured out a way to monetize it yet, but they probably will. Anyway, a couple of ideas. I like AT&T as a long. I'm long that one, but there you go. That's our stock market and volatility report for the day. Have a good one. And if you have any questions, send me a note, Andrew@optionpit.com. All right, bye-bye.